All right, guys. Hope everyone's doing good. I'm Devang Mehra, and let's talk about the markets for a little bit, shall we? I don't need a very big detailed video today because we've talked a lot about the live market commentary on Telegram. Himalay's been active. I've been active today, and I also put up a video on YouTube from my office around 12 o'clock, one-ish, to give you the update about the live commentary about the profit booking that was taking place. And I hope you have listened to all these points in all different platforms very carefully, because everything eventually connected the dots and everything worked out very well for us. Yesterday I talked about one thing again and again. In the start of the video, I made one point very, very clear. Let me know in the comments who remember the point of investment banks sitting on huge stockpiles of cash. And that is something eventually you saw in the market today. You saw a good global sell-off that happened in the markets. But what happened? What happened after 245? Did you see that immense buying happen? And I've talked about that in detail last evening. So please don't remember that. Any dip that's coming into the market is going to get aggressively bought into, because the big money is sitting. They're waiting for any good significant dip coming in, and they are sitting on cash and buying good stocks. The second thing I've made very, very clear: as long as FIIs are selling and as long as DIIs are buying in good quantity, you're always going to get this immense last hour or last 30-minute buying. I talked about the DI buying 1,000 crore plus, and if they do that, you'll get these immense buyings coming in. So you saw yesterday DI bought in cash, and that's the result of what happened today in the markets as well. So please remember these points; they'll make a lot of sense as you go on. Remember one thing, this channel that I've created, my TFA channel that you've already been on earlier, these channels are, or our Telegram channel, they're not for giving you calls or, giving you easy way to make money. It's for learning. It's for learning, telling you our perspectives in the market. It's very different from probably what you've heard. That's why you're here right now. So please, you might not see a couple of things working out in a day or two, but I'm telling you that honestly from my experience that they do eventually work out. So learn different perspectives, learn different things from us, so you can use in the market, and get survival and get safety. Last evening when I came on YouTube, I talked about one very simple thing. I said, if the markets are opening gap up, I'm not going to be interested in selling. And today morning, and I also said that if, tomorrow I'm looking at selling Nifty if 15,800 breaks. I'm sorry, we do have a beagle, so he makes, he's very aggressive, but he's very cute, so we love him. So sorry if you hear these dog noises in the background. But yesterday I said I'm not very interested in going short on Bank Nifty, and Bank Nifty eventually cracked a lot. So one reason why I didn't, go short or trade short in this market today was because it was not in my plan. And that's what I'm here to tell you. If something is not in your plan, don't trade it. Don't have this FOMO feeling, coming your way and, thinking like, yeah, aaj market ka top ban gaya, let's go short. And eventually, if I don't go short, I'll miss this movement, because you will never miss anything. Market's always going to be there helping you out. So I did not make money on shorts. I wasn't participating there, but I did make some good amount of money in the longs. And I shared that trade idea in the last 30, 40 minutes on Telegram as well. We bought 17,500 calls. We went really in the money. And I told you what this saying last evening. I said, bulls make money, bears make money, but pigs don't make money. And I said, don't be a pig. If you want to be a pig, make sure you go real in the money so that your options contract becomes a future contract. So the 150 call option, 150 premium went all the way till 280. And that's a very in the money call option. And that is what offers me safety in the market. I hope you all have benefited from these ideas. Let me know in the comment section if you did, if you enjoyed the Telegram channel today. And thank you all so much for tuning into our YouTube and tuning into our Telegram channel. If you enjoy, please like, share, subscribe, and comment. That means the world to me and the team. The other thing is, as I said, as I've been saying in my last couple of YouTube videos, I'm not active on YouTube all the time. So if you want to reach me at any point of time, Instagram is the best place for me. I'm going to leave a link in the description. Devang Mehra is my Instagram username. And if you want to talk to me on some professional matters, any consultancy or appointments required, please email me. I'm not active on WhatsApp or on calls, so please email me, devang@devangmehra.com or tanisha@devangmehra.com. We'll get back in touch with you ASAP. But as I said, I wasn't very prepared for Nifty Bank to go down aggressively. And I was proved right at the end of the markets. If you see, Bank Nifty has actually closed 100th stronger as compared to Nifty. And that eventually didn't make sense. I also talked a lot about the levels of 17,720 on Nifty. Last evening when I came on YouTube, I said that 17,800, that's a place that if markets go below 17,800, you can take 180R. If the markets go below that, the longs have to eventually cover and they will have to book their losses, or they'll have to get out of the positions, and eventually shorts will start to dominate. And that's exactly what happened. And the markets kept on going down. I was very adamant about 720 levels on Nifty, 17,720. And that's what I came on YouTube and I said that if the markets, please look back on the video that I've posted, because now I want you all to look at these videos so that things will make sense and you will learn how I'm interpreting the markets, how the team is interpreting the markets. And I said today, if Nifty closes below 15,000, 17,720 approximate levels, the momentum of Nifty is going to wither away. And that's going to let the bears attack be successful. And today in the evening, that's exactly what happened. Markets have not closed below 17,720. So the bulls are still intact. And you can say a big short, a trap has taken place today. That's what I can call it today. But again, we'll see tomorrow how the markets progress. At the same time, Himalaya also messaged on Telegram, and you saw it in my video, that 17,600 was a gap filling that took place, and the markets eventually took a good support from there. So I hope all these things that we've discussed on Telegram and on YouTube are making sense, and you're using them in the analysis that you're doing in the markets to eventually make money or to not make a loss. That's the entire idea that we do these videos. And now the question is what to do forward. Nifty IT a little bit, couple of cents I can talk about Nifty IT. See, today a global sell-off happened. You can see all the American markets, UK markets, everything, every future is trading down. So that's called systematic risk in the markets. But Nifty IT, just to reiterate the view that I have, I am still okay on Nifty IT. I always believe, if you attend my seminars, you've heard these sayings that candlesticks are fraud. So I don't want to buck the trend. I don't want to take a trade on candlesticks. So yes, we are seeing a bearish engulfing, but for me, 35,313, that's a level I'm very adamant about. So just see how it works out in the future. It's a weekly level. If I've said the daily level, I'm sorry about that. 35,313 is a very strong weekly support. If the markets at the end of the week close below that, any short-term IT trades taken in today, yesterday, day before yesterday should be cut. But if 35,313 is held, that could be a good bottom of the IT for the short term as well. So just remember that point of time. Bigger charts is simple to interpret. Smaller charts have more hiccups. So always and always and always have a bigger chart. And I also am of an opinion that whenever the markets want to fall, they don't fall in a single shot like Nifty today. It fell down, it again came back up. So if Nifty wants to fall tomorrow, it's got to again come down, build up, then again fall down. Same thing with Nifty IT. If Nifty IT wants to come down, it's given a very good dip in the last couple of days, about 8%. Nifty IT has come down. So if it really wants to come down, it's got to give some kind of double top, lower highs, lower lows formation, and then eventually could fall down. So eventually we should be able to make some money on this pullback, or if that's a short-term bottom, on that increased rally that goes on. So by the end of the week, we should be clear of what the view of Nifty IT is. 35,313 is a level to watch out for. For Nifty, the level remains same, 17,715 to 725, 10-point zone. I'm not going to give big levels to you, just 5-10 point zones. Look at the daily candles where they close. If you're closing above that, Nifty remains strong. Nifty still remains bullish, and there is no momentum loss in Nifty per se. Talking about tomorrow's market, first of all, still euphoria remains, right? You can still see markets are giving you higher highs, higher lows. That's also maintaining. And at the same time, if the markets want to come down, you've heard Gann talked about it, and I can tell you that with good accuracy, you need double tops and double bottoms for the markets to reverse. Until now, we haven't got any. We haven't got a double top, we haven't got a double bottom, so we can't really decide we can't really take a trade in the counter direction. And as long as the lower levels are maintained, you remain bullish. Yesterday, I talked about one very simple point. I said that if the markets want to come down, or if you want to be very aggressive short on the market, let the market first come down, let the bears attack. Today, bears attacked, but they failed. Yeah, and they failed quite a lot. They brought the markets down about 250 points intraday. From not even that, they got the market down about 300 points intraday. From the highs of 17,900, today low was about 17,575. And think about that, if the bears were actually strong, why did the markets not close at the bottom when they still came back up? Yes, the monthly expiry phenomenon comes into play, because when the monthly expiry is coming, things do get very explosive. Things do get very, very volatile. So that's there. I'm not going to, reject that. And also I talked about one more very interesting point, that generally when the markets have to break out or break down, they wait till the monthly expiry gets over. And then once that is over in the first week of October or in the first week of the next expiry, they generally break out or break down. So I made these points, small points, keep writing them down and keep on observing. Um, I talking about markets going forward, right? So see, try to understand 17,400, 17,500, 600. They're massive supports. Why do I say that? Is very, very simple. Because any dips coming in the market, think about what you are doing. Don't just blank out or have a confirmation bias because you're in a trade right now. But think about what you're doing when the markets are coming down. Look at a 4-hour chart. Let's make things simple. Let me explain what's really going on. Look at a 4-hour chart. When people are getting dip in this market, what do you guys think? First of all, comment and let me know. Let's make it a discussion session. So I'll tell you what a normal person thinks like. A normal person, or a person who is new in the markets, or any person, I would say, for that fact of matter, he's going to think like this: "Yaar, I've missed this entire move. So if the market is giving a dip, let's buy." They're going to use tools like Fibonacci. They're going to put Fibonacci retracements. Ki, haan, yaar, markets are actually retracing to 61.8, and that actually makes a lot of sense. Market stop at 100% retracement. So markets are coming here, let's buy. Shayad, this could be the dip of the market, it could be the end of the pullback, and let's try to buy this market. So anyone who has missed this rally from point number 1 to point number 2, and they're going to be like, yeah, jo bhi dip aa raha hai market mein, let's go long, let's go buy that dip. Because eventually you have to understand, in a bull market, dips come in and they are fast and furious, but they get equally well bought into, right? So on a 15-minute chart, things become very, very simple. 17,600. This remains now a massive support. You can see the levels being tested now about one time today, and earlier also the level has been tested a lot of times. So this is a massive, massive level. So if the markets want to come down, they got to come down below this level. I'm again going to put it this way: 17.6 now is a very good level for the bulls to defend. And if you're staying above that level, I think there's nothing to worry about. In the short term, you could get some dips, but I would say any dip towards 17.6 should be a buyable dip. I don't see any problem. Yes, some pressure has been established by the bears, but as I said in the last couple of weeks on Telegram, always and always and always look for double bottoms and double tops. So this is called a first pullback. Yes, some kind of selling will again come in tomorrow. Why? Because we think about the opposite way. Anyone who has missed this shot, let's say for example me, if I have missed this shot, what will I do? I'll put Fibonacci again and I will say, yaar, maine ye shot miss kiya hai, and currently market is at 61.1 retracement. Let's go short again with a small stop loss and let's take the market down. Everyone thinks like this. I hope you do the same thinking. So for example, let us say if the market opens, small gap down or something, again the pressure could come in. I'm not going to say it's not going to come in. It could again come in, because generally, depending upon global markets again, generally anything happens after 1:30 p.m. continues even in the second day, or even for at least the first hour. So tomorrow, what you have to observe is, if, for example, in the morning markets open with a gap down or something, because gap up will be a totally different scenario. If tomorrow the market opens with a small gap down or something, and the selling starts to come in, if you are short in the market, I would say first of all book your profits over here at 17,600. Observe how the market reacts at 17,600. Because if the markets are breaking even 17,600 tomorrow, and if they're closing there, sustaining, spending some time below 17,600, that's going to be a signal that the markets are in fact becoming weak, and it's going to give you some kind of a double top, and the markets actually will start coming under pressure. So that is one level which you have to keep in very, very clear mind. Of course, 17,725 will be an important level to decide the momentum as well. But for tomorrow, if the markets open small gap down, or little bit gap down, and if they start to come down, observe. If it breaks down, you will have support at 17,500 and then going down further. But generally, if this is actually, if the markets are actually, the bulls are actually strong, and if they don't want the base to succeed, what you have to see is, if, for example, let's say market comes down again today, and you see something like that again happening, a good bullish bar at 17.6, place a small stop loss below 17.6, and you can again long or aim for the targets on the higher side. These are two, trade ideas that can turn out for tomorrow. The dollar index is becoming stronger. Crude is becoming stronger. And as I said yesterday, this will bring pressure to India. So that is why even I talked about the VIX last night. I said if VIX goes up, a lot of jerks will be faced on the upside. And I hope you are seeing these small points that we are discussing in videos in the live market. If you're not able to trade them, because even I can't trade these things every single day, there's so much going on in the market. It's fine. but just keep on noting them so that in the future you're able to trade them. Hope you are getting the idea. But if tomorrow, let us say, markets open only above this, and so generally, one more thing, Wednesdays are generally volatile because one day before monthly expiry, and I think last 3 4 expiries have been quite trending, which generally is not the case because option sellers are always the winners. But last 3 4 expiries have quite been trending, so it's possible, it's very possible that this expiry becomes sideways, and generally even Wednesdays become sideways. People plan for expiries, they build up positions accordingly, and generally it turns out to be a buy support, sell resistance kind of place, or a option selling kind of area. So you have to understand you have a massive support now at 17,950. You got a massive resistance. You got a massive support at 17,600. Also 17,800 is an area of importance. So try to observe how markets play. If markets are opening gap up, observe karo, because if they open gap up, then generally the closing price does become support, and it could hover between this range. It could be something like that. If the selling pressure comes in, it could hover between this range. So all these things become very, very important. Generally, I don't plan aggressive trades on Wednesdays. An aggressive trade could come in when? An aggressive trade for me could come in if the markets open gap up, something over here, 17,880 or 890, and then the markets, if they they'll get some profit booking because a huge gap, and then they break this out. That could be a very good trade. But again, I'm always of the idea that let the markets first consolidate and then they break out, because that is something which is very easy to make money on and very likely that the trade would work. So, and one idea could be that the markets, let's say, open a small gap up, the entire day they do something like this, and eventually on Thursday they break out. That could be a profitable idea. Or on the bottom side, let's say they open flattish and then the markets come down the entire day, they try to spend time over here, try to give you double bottom, but they fail and eventually they come down. That could be a great short idea. So I generally am always of the opinion that don't trade something like this or something like this, but let the markets consolidate and let it break out or break down. That is something which I have personally made my most money on. So let's observe where it opens. Let's observe where it opens. I would say anything gap downside, it will try to get some pressure, but any higher lows and then breaking out of the W's of 17,775. So any breaking of the today's high, today's closing price will be a signal to again initiate longs, because people will have to establish their dominance over the bears. Same thing. So you are in a range, play accordingly, 17.6, 17.950. Whichever side the range breaks, we'll have to go in that direction. Wednesday's plan accordingly. Don't be so aggressive on the market. You've got a good movement today itself. Bank Nifty is very similar. It's closed around 37,945. Last 30-minute averaging has helped you do that. And I told you about this, that because Bank Nifty has broken to new all-time highs, there are just too many supports. And unfortunately, we didn't get a lot of supports. You got a good inside candle short here, inside candle short here. But eventually you saw the moment when the support came out to be here, it just went up like anything. Thanks to the banks that Nifty has actually, ended well. So again, Bank Nifty, very similar views to Nifty. You have a good support at 37.3, 37.2. They are good support. So if the market comes down tomorrow, breaks that, that's a signal that really the peers are attacking and they're overwhelming the buyers. But if that doesn't happen, if the market comes down, opening lower, and then it breaks out, that's a signal to go long, but again, not aggressive long, because you do have a strong resistance, at 38.4, 38.3. So eventually aggressive longs will be planned at 38,400, or long should be planned when the markets start to break and confirm that the buyers are in fact in control and the sellers have been trapped. So keep all these points in mind. Bank Nifty is in the range, today's low and 38.4. That becomes a very strong range. Let the markets, decide what they want to do. Today has been very confusing. Let me know how your day was, how confusing it was, because if you were in the wrong direction, you would have just got slayed because of the immense and violent moves that happened. But this is what markets are. It's all about uncertainty, and you have to accept it. Whatever happened till 3 o'clock, it's done. Forget about it. Move over and plan for the next day. You have to be very emotionally balanced, because trading is stressful. Don't be too hard on yourself. That's all for now. And if any important update is there, I will surely let you know on YouTube or Instagram or on Telegram. So all the links where you can reach me and the team are going to be in the description below. Cheers, guys. Have a good day.